Hello, 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 hello. I am just getting things situated and we are going to get started. We have a lot of great information that we're going to share with you all today as it relates to home buying. We're going to be talking about all things home buying. So get a paper, get a piece of paper, get a pen, pencil so that you can take notes so that you will be able to get the information that you need jotted down for your access later. Also, if you have a question, please drop the questions down in the comment section, okay? Drop the questions down in the comment section. I'm going to use my cell phone and go live so that I can see all of the questions. I am using StreamYard to go live. So give StreamYard access so that you'll be able to see all of the features that it has, and so that your name and information will come up in the comment section. And I am simply going to, we're just waiting for, first of all, let me make sure that I can get Ashley on here. We can't have a home buying session with Realtor Ashley if we don't have Ashley, right? So let me make sure that I can get her in here with no problems. Okay. Okay. Welcome, 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 everybody. This is going to be a great session. While we're waiting on Ashley to get in here, do me a favor, go ahead and share this live. Go ahead and share this live. Once you have shared it, comment, share. Those that share, you're going to be entered into a drawing for some goodies. Okay? So, hey, Trishelle. um, don't get caught, girl. Hey, Shauna. Hey, Shantae. Hey, Monica. Hey, Willette. Thank you guys for joining. We are going to get started momentarily. Go ahead and click like and share so that we can spread the word that we are going live and we are talking about home buying right now. I'm pretty sure that we can get the information in. Can I make it live? Oh, you know what? You can't share it because it's in my private group. So tell them to join, okay? Share my Facebook page. Share the private group, and we'll do it that way. How about that? Share, tell them to come on and join Elite Credit Services LLC credit group. How about that? And once you've done that, hit done, and you'll be entered into the drawing. Hey, Ashley. Okay, Ashley is here now. Ashley, I need to try to get you on here, girl. Let me see how I can get you on here. All right, let's see. I need to add a guest. Yes. Okay, give me 1 second to invite messenger. Yo, we're gonna get this together. Just give me a second. Ashley, check your messenger. I did send you a link. I'm hoping. Yes. Yeah. I did send you a link in your inbox. And I believe those steps will help you to so that I can add you as a guest. Okay. So we have a great outline ready for you all. Let me give me 1 second. Let me cut this here off. Makes a lot of noise. Okay. If you see me looking over here, I'm looking at my cell phone camera. Let me go to my inbox. Okay. All right. Okay, guys. So tonight is going to be all about home buying. Okay. I know that the topic of home buying can be a little daunting to some. Many people feel that it is completely out of their reach, but it is not out of your reach. It is not, you don't have to be perfect in order um to be able to purchase a home. Yay, Ashley! Okay, Ashley, I'm gonna bring you on in 1 second, okay? Yes, we got it together, honey. And guys, we didn't even practice. We didn't get on early to practice, honey. We are just making it happen tonight. Okay. So back to what I was saying. I know that the topic of home buying can be very daunting to some. You might feel like you don't have it together. Your credit has to be picture perfect. But Ashley and I are here tonight to help you understand and realize that you do not have to have perfect credit in order to find your perfect home. Okay. Or investment property. Okay. We have some people that are here that are interested in purchasing an investment property. So all of the information that we're going to share with you can be used in that arena as well. Okay. So, as I stated, without further ado, I'm going to introduce and bring on our realtor for tonight. This is not going to be the only home buying session we have. I have connection with several realtors, and I am going to be bringing one or two on every month to share some jewels with you all so that we can arm you with knowledge. The biggest thing that you can have in any field when you're getting ready to do anything is knowledge. Okay. So hopefully tonight you all will learn something amazing that will help you and go out and purchase your first home or a new home or homes up plural. All right, so let's bring on Ashley.
Hello, hello, hello. Can
How
you hear
are
me?
you?
I am doing well, doing well. It's been a
I don't know
long
about you. I don't know about you, but I'm super excited that this worked without like any hiccups or anything.
right.
Because you know
New
technology can be a
things going
trip.
on.
So, Ashley, I'm going to give you the floor, give you the opportunity to introduce yourself, tell the people how they can reach you, and then we'll come back and jump into our outline for tonight.
Awesome. So my name is Ashley Pelzer, and I am a licensed realtor with Burson Presley Realty out of the Columbia office. I am in the upstate, however, all addresses in South Carolina are local. So if you are looking to purchase a home or sell your current home, I would love to assist you. My phone number is 864-640-7004, and I'll put all of my contact information down in the comments once we're finished.
Yeah.
So whenever you're done, when you're finished working with Makita, she got you squared away and ready to go. Feel free to contact me so I can get you home. Okay.
That's right. That's right. That's the goal. That is the goal. And that's one of the things that we're going to talk about tonight. A lot of questions that I get from my clients is when can I start looking? And when can I contact the realtor? So we're going to answer all those questions because for one, when I send clients to a realtor, I want them to be ready from top to bottom. I don't want them to have to start over or do anything. I want them to be as prepared as possible when they come knocking on your door. Okay.
Right.
So one of the first things that I would like for you to kind of elaborate on to just right out of the gate, when someone is looking for or someone is interested in becoming a homeowner, what are the ideal steps that they need to take prior to seeking the assistance of a realtor?
All right. So before you even reach out to a realtor, you want to do your research. And that's your personal research as far as where you want to stay. For one, get those ideas in your head where you want to be. Um, you also have to have a steady income, 2 years of income. Um, Basically, before you reach out to a realtor, there aren't a whole lot of excuse me. Oh, ooh, I need some
Get
water.
back, devil.
Ooh, I know. All right. So, but as I was saying, before you reach out to a realtor, you do want to do your research as far as figure out where you want to be. You want to vet different people as well. So a lot of people, they'll reach out to a realtor, and you'll find that some realtors aren't for everybody, just like some individuals aren't for every realtor. So you want to figure out where you fit, basically. So if you're researching, like vetting different realtors, looking at their social media, like, oh, I don't want to work with them. Oh, this is a good person to work with. Just kind of get a feel of where you want to be. But the real thing is, the biggest thing, you won't really know until you actually sit down and talk to somebody. Now, to prepare you for that, I'm sure you would work with Makita. Like if you have some credit questions, you would work with Makita. But once you have those credit issues squared away, that's when you will want to reach out to a realtor just to vet them to see if they're a good fit for you. And if they are, then you will proceed with the next steps of the process. And I don't know if you
Awesome.
want me to go ahead and go into those steps, but
Yeah,
I mean,
we're gonna go into those steps because I think that that's essential for them to know. Because one thing we're not going to do in 2021 is waste time. We don't want to waste anybody's time. And we don't want to get, and I don't want anyone on this live to get their hopes up and then get in the midst of the process and then you end up either losing, finding the home of your dream and then end up losing it because you didn't have the things needed to finalize the closing. So we
exactly.
definitely want to go through them. So yeah, go ahead and elaborate, and any questions that you cover, from our sheet, if you answer them, we'll deal with it when we get there. But yes, please
Okay.
go ahead and let's talk about those steps.
All right, perfect. So, pre-approval. That's the first part of the process. And that is the part that you want to do before you even start looking for a home. Now, you can have an idea of the location that you want to be in, but before you get a pre-approval, do not say, I like this home. This is the home that I'm going with, and I know this is mine. But let me tell you why. A pre-approval will actually tell you where you want to be. Now, you can look at this home, and this home is $250,000. But when you go to a lender, they say you're only pre-approved for $200,000. So you have to come up with that other $50K out of pocket. Now, some people can. Yeah, I'm not knocking it. I can't. But some people can come off that 50 grand and get that home that they want. But
Yeah.
during the pre-approval process, they'll actually tell you exactly what you're pre-approved for. Um, the actual budget where your monthly payments will be. Even if you want to say, hey, I want to stay in the $800 a month range, that includes my principal, interest, taxes, and insurance. I don't want to go over that. They're going to say, okay, we can get you in a home at 175,000, or we probably can squeeze in maybe an extra 6-7K. um that pre-approval, once you have that pre-approval, that's when you can actually start house shopping. You'll know your budget. You'll know the area, if you can afford like HOA fees, anything that's included. It's also going to tell you the type of loan that you would qualify for, which you have so many different loans. You have conventional loan, which is sometimes 80% financing or 100% financing. You have the FHA loan, where that requires 3.5% of your purchase price. You have a USDA loan, that's 100% financing. USDA loans are more so in rural development areas, and they sometimes have income limits as well, to see if you could qualify. And then you have VA loans for all of our veterans. So getting that pre-approval, it'll actually tell you right then exactly where you need to be. Now, to do that, to prepare yourself, some of the things that you have to have, like, because you don't want to waste time. If you do find a house that you really like and you're like, okay, I need to go talk to a lender to see if they can go ahead and get me pre-approved so I can get hooked up with a realtor so they can put in my offer on this house. Here are the things that you want to have up front. You want to have 2 months of bank statements. You want to have your last 2 pay stubs. You want to have your last 401k statement. If you have any additional income like alimony, child support, anything of that nature, you want to have the court orders or any type of letter stating that this income is mine and it's valid. You want to have all of that readily available. You also want to have your last 2 years tax returns and W-2s. So if you have all of that information ready, for one, the lender is going to be happy because hardly anybody has all of the information readily available right up front. Oh, and also copy of your social security card and driver's license. You're going to need that information too. But hardly anybody has.
And I'm going to get you to. I'm going to get you to repeat those so that I can put it down on the. Can you go over that list one more time? What they will need for, and this is for pre-approval, correct?
Yes. Mm-hmm. It's
okay.
very
So you said 2 months.
2 months
bank
of bank
statement.
Mm-hmm. Your last 2 pay stubs.
Uh-huh.
401k statement. Any extra income like alimony or child support. Your driver's license, social security card, last 2 years tax returns and W-2s. So if you go up to a lender and you say, hey, here's my folder, here's all of this information, more than likely they're going to work with you right then and there because like, okay, I don't have to wait for this person to get me all the information that I need. I can go ahead and see if we can get them pre-approved. So bam, you take all of your information, they give you your pre-approval. At that point, if you don't have a realtor already, that's when you can reach out to a realtor and say, hey, I have a pre-approval and I would love to purchase a house and, I would love to work with you.
Exactly.
So, yeah. So once you actually connect with that realtor, then that realtor will actually be responsible for putting the offer in for you. Now, let me back up for a minute because you can go with a house that is currently with the resale, a house that's already built, or you can go with new construction. Either way, and I'm not just speaking because I am a realtor, but you want a realtor. And you very well can purchase a house without a realtor. However, a realtor works for you. You're hiring that realtor to have your best interest, to negotiate on your behalf. Now, let's take new construction. You say, hey, I like this new construction home. I'm going to go in here and I'm going to go talk to this agent and see if I can get this home. Now, that agent that's on site works for the builder. So they're not trying to save you money at all.
Nope. They're trying to let you get all the upgrades. They're trying to run the price up. You want a floating this and a floating that. Oh, exactly. Sure. You want a pool? Exactly. Oh yeah, they're trying to run it up.
And the thing is, they want you to do all of these upgrades, but not. And you're happy because you're house shopping. Like, okay, I want this and I want that. Not knowing they're charging you $5,000, but you can get in that house and get a licensed contractor. And they'll charge you $2,000 for that same for whatever it is that you wanted. Yeah. So understand that whether it's a resale or a new construction, hire a realtor, someone that's going to work for you that has your best interest. And then, like as far as negotiations, an agent on site isn't going to tell you that they can pay some of your closing costs. They're not going to tell you. Go ahead.
Now, hold on. Before you go there, because that's one of the questions on our list. I want to back up to before we get to that portion of it, because closing costs and all of that, that's a big, I saw that question on 2 surveys that I sent out to a small group of my clients and prospects. And some people don't know what is involved in the closing cost. So I want to backtrack 1 second to the pre-approval area. Okay. A lot of my clients, there's two points I want to make. From the credit side and pre-approval, what as of right now, because I know this number changes sometimes, depending on the times, depending on different facets of whatever bankers, the interest rates and everything change.
Mhm.
What middle score is currently the minimum requirement for home buying?
Okay, pre-COVID, you could buy a
Mm-hmm.
house as low as a 580.
Mm-hmm.
If you were a VA, you could get a house with a 500 credit score.
Mm-hmm.
Post-COVID, you can still purchase with a 580, but they're going to want more money down. They're going to give you a higher interest rate.
Mm-hmm.
You want to keep it at least at a 620 or higher, 640 to get the best bang for your buck as far as interest rates.
Come on, elite clients. What I tell you, 640. That's my magic number. Listen, I don't release my clients until they have a 640 middle score minimum.
Yes.
Minimum. That's me, because I feel like, from month to month, let's say your utilization on credit card fluctuated, which caused your 620 to drop to 616. Now you're not qualified.
Right.
Yep.
I
feel like a 640 is a good, comfortable range that'll, give you a little room to, maneuver here and there. But of course, if they follow the steps, their score will continue to either maintain or rise. But 640 is my magic number.
Yes. And I get clients, right, exactly. And I get some clients that they'll come to me and they're between like a 610 and a 620 range. I wouldn't necessarily say, oh, you're not ready. But what I'll do is I have a lender that I work with personally, and he'll actually say, you need to pay this credit card down to $18. You need to pay this down to $34. And they're like, well, I have these in collections. Well, sometimes you don't have to worry about these collections, because it all depends on the age of the collection and the amount, because different lenders require different things. Some of them, they kind of give you some leeway, where this lender will say you can't have any collections on your credit report, whereas this lender will say, or you can have up to $1,000 in collections on your report. You can have up to 2,000. Oh, this is 12 months old. You won't even need to worry about that. It's already done the damage that it's going to do to your report, so you don't even have to worry about it. So it all depends on the type of lender that you go to too. And that's another reason why I have a team of lenders, because I know if I have a client that is 610, okay, I can send them to lender A. If I have a client that is 740, or I can send them to lender B. So you have to have like different people to work with.
That arsenal, that team, that's very important, because your clients are going to be coming to you in a variety of ranges, and it's very important. Backing up to the debt, that major debt, and I said this in the beginning before we started, and that is one of the questions on here. I can't put my eyes on it right this second. It basically was asking, do I have to have perfect credit to get a home? And you pretty much covered that by saying that you can have a collection. I have had clients who have been able to successfully go through purchasing a home with a bankruptcy on their credit report.
Yes,
so your credit report,
you can.
Yeah. So your credit report doesn't have to be picture perfect and spotless.
Exactly.
What about student loans? Let's talk about student loans. And some people say having student loans will get you denied. Student loans isn't third. Let's talk about student loans and how that affects home buying.
So now student loans, when it comes to student loans, if my client has student loans, I'm actually going to send them directly to the lender, because it depends on whether or not they're on like a repayment plan, or the age of their student loans. If they have that, like if they could get that 30-year statement that shows what their payments would be, and as long as it's less than 1%. So it all depends. It's like a case-by-case scenario. So if a client comes to me and they say, if they have only 20,000 in student loans, I'm like, okay, I'll send you to, I won't say his name on here. Hire me as your realtor. I tell you my team, you know what I mean? I'll send it to
that's right.
Yes, I'll send it to lender A, and this is their situation. They only have 20 grand in student loans. But if I get a client that has quite a bit of debt when it comes to student loans, I'll send them to a different lender, and they'll kind of tell them exactly what they need to do, because student loans don't necessarily disqualify you from purchasing a home. You got to understand that. Some people like, I got too many student loans, or some deferment, or I haven't paid in forever. The one thing you cannot do is assume that you do not qualify to purchase a home.
That's right.
Don't assume. Actually talk to somebody. Call me, because
the expert.
Yeah, and I can actually help you. I'm one of those people. I don't turn anybody away. Now there are some people, like, I'm not working with anybody that has less than a 700 credit score. That ain't me. And I know that's broken English, but that ain't where I come from. You know what I mean? And I want to see us win. So I take the time to actually educate, like, people with those 540s or those 610s, or even some people even lower than that. And they're like, I'm down and out. I know I ain't gonna ever buy a house. Oh, you don't know that. You don't know that. Yeah, your credit score is low, but how much do you make a year?
That's right.
Maybe you just don't have enough credit, or you have no credit at all. All you need to do is get a secured credit card, pay your bills on time. So never ever count yourself out, or never ever judge. Or you see this person, oh, they got a house, I know I ain't gonna get one. No, your time is coming if you want it bad enough.
That's right.
So don't count yourself out, regardless of your situation.
Exactly. And also, you hit a couple of really good points there. We have to get out of talking to the street committee and family, because what works for one person does not mean it's going to necessarily work for someone else, because your experience is different. Your profile is different. So the steps that Ashley had to take will probably be different from the steps that I have to take. I think that, I really think that we are our biggest enemies when it comes down to home buying, even when it comes down to credit building and credit itself. Your mindset determines your growth and your ability to grow, really. I think that when you surround yourself with the right people, especially the experts, I get a kick out of watching Facebook sometime and looking at posts when people say, who can repair credit? Okay. And they'll say, oh, you can do that yourself. Clearly they cannot.
Exactly.
I feel like if somebody is reaching out for help, point them in the right direction so that they can get that help that they need, and go from there. And that's with anything, if I'm looking to purchase a home, I'm not going to go talk to my brother, the plumber. Like, no. I want to talk to
his experience. Could be totally different from yours. So
could be totally different. It's very important that we definitely educate ourselves, and like you said earlier about, it's okay to speak to several different realtors and find the realtor that fits you. Just because your cousin or your sister-in-law, your brother is a realtor, doesn't mean that they are equipped enough to help you in your situation.
Exactly.
But that you won't know any different if you're not educating yourself. So Home Buying 101 with Miketa and Ashley tonight is step one. And we are definitely here to help you. Just as a reminder, I'm looking at the comments. So if you guys have any comments or anything, please make sure that, or questions, make sure that you drop those comments and questions in the comment section. Trina, we making your eyes sweat. Listen, we are here to encourage. So definitely let those eyes sweat, and then go to work tomorrow. Start with, it all begins with a step. It all begins with step number one. And actually, the 30 so people that are here on this live tonight, this is your step one. This is your step one. If you're interested in home buying, this is your step one. And with everything, it begins with education. So I just want to check to make sure that everybody is Katrina says that's great news to know because woo child, these student loans. Listen, student loans.
Don't count
Student
yourself
loans.
out. Listen,
No,
don't count yourself. I know so many people like, I got too many student loans. I got too many doctor bills. Listen, don't count yourself out.
It doesn't matter. That's
I
right.
promise.
That's right. And also, I tell people, if you have your heart and mind set on a particular type of home, and it might not be your forever home, but it's your first home, that's okay. That's a step, because of course, we all want to be owners versus renting. Renting is a step, just like maybe your first home might be a step to your forever home, so it's just all about taking those steps and moving forward. So, okay, Ashley, we've covered a lot in just those two little topics about pre-approvals. So just to clarify, guys, you cannot call Ashley tonight and say, when can we go home shopping? I want to go look at houses tomorrow. That's not the move.
Without a pre-approval.
No, you gotta get your pre-approval. You have to get your pre-approval. And also, when we talk about, you listed the things, what are the other factors? You said your mortgage, your insurance. What are the other things that you want them to keep in mind when they're thinking about their monthly payment and the cost of their home?
Principal, interest, taxes, and insurance.
Taxes. Oh Lord. Yes, listen, when you own something, honey, you stepping into a whole nother arena.
Exactly.
So, you got to pay a little tax at the end of the year for that new house now.
And listen, that is why when you're shopping for a mortgage, you want to make sure that your mortgage is fixed. Your interest rate is a fixed rate and not an adjusted rate. Because now the two things that will change, let me start over. You have your principal, interest, taxes, and insurance. Your principal and interest with a fixed rate, they aren't going to change. That's what it is over the course of 30 years, however long you have your mortgage. Your taxes and your insurance, those can fluctuate with the fixed rate. An adjusted rate, everything can change. So your payment can be $900 this year, and next year
$1,200.
Yeah. So you always want to make sure that your interest rate is fixed, a fixed rate. Just wanted to cut in and say that.
Listen, I'm not a realtor, and I know that part. You want
an adjusted rate fixed, yes. So your principal and interest will not change at all.
That's right. Even if it's your dream, it's your perfect home. What type of situations when you do we have a choice of fixed or adjustable, or is it an option? Is that a choice, or is that an option that's presented because of your situation?
Now, you definitely have a choice, but regardless of whether you got a 580 score, get an FHA loan, you have a 740 credit score, you have a choice to whether or not you want a fixed rate or an adjusted rate. You definitely have that choice. Good. However, most lenders, they wouldn't even put you in that situation if they know you're financing a house over 30 years, they're going to give you a fixed rate, but just double check your paperwork.
That's right. That's right. And knowledge is key. You want to make sure. So if you don't remember anything else, fixed rate, not adjustable.
And your realtor could actually, now I will say, this is another thing too, Makita, I have to say this, because I get some people, especially like some people that like I grew up with, and they're like, I don't want you to know my finances, or, I don't want you in my business. Okay, listen, as your realtor, for one, I don't have to know your business, because when you prepare those documents, as long as you prepare them correctly and send them directly to the lender, they're going to get all in your business. I don't have to know how much money is in your bank account unless you want me to know. So Just know that as a realtor, whomever you choose as your realtor, if you don't want them to know your finances, they do not have to know your finances. You can work directly with the lender as it relates to that. So I don't have to know how much money in your bank account, because I've had people say like, girl, I don't want you knowing. Well, one, you buying a house. So, you know, you got to have some ducks in a row, which leads me to something else. Okay.
Keep the jewels coming, sis.
Yeah.
Keep the jewels coming.
So some people feel like when they hear 100% financing, oh, I don't have to pay any money to get this house. 100% financing is 100% on the purchase price. That's it. So if your house is $100,000, then you can finance that full $100,000. However, you have upfront costs and you have closing costs. When it comes to an FHA loan, you have a 3.5% down payment, but that does not include closing costs. Down payment is totally different from closing costs. They're two different things. So when it comes to money to purchase a home, you don't have to have $20,000 in the bank. You don't have to have 10 grand in the bank. If you got a good 5,000, if you got a good 3,500, it's going to be attractive to the lender. Like, okay, she got some money in reserves. She got some money for her upfront costs. Then we can proceed. But if you go and say, I got $10 in my account, you have to work, save some money, take 3-4 months, however long it take you to save some money and get yourself going. Now, I mentioned upfront costs. When you're shopping for a home and you actually find a home, that home is under contract, there are costs that you have to pay. For one, you have to pay earnest money, and that earnest money, you basically pay it to the seller. It doesn't go directly to the seller. It sits in an escrow account, basically at an attorney's office. And that can range from anywhere from $500 to 1% of the purchase price. And that basically says, hey, I'm serious about buying this home. Take it off the market. I don't want anybody else to get it. That's what your earnest money is for. Again, that can range anywhere from 500 to 1% of the purchase price. Your next set of costs, upfront costs, would be your inspections. 3 different types of inspections. You got your home inspection, you have your HVAC inspection, as well as your termite inspection. Those are 3 different costs. Your home inspection, it can vary depending on the square footage of the home. They can start at as little as $230, go all the way up to $500. It just depends on the size of the home. Now, if you got a $10,000 square foot home, you're going way over that $500. HVAC inspection, and your termite inspection. Those two, the HVAC inspection, it just depends on the type of vendor that you use. It can range anywhere from $100 to $300. Termite inspection, I go with one. I send my clients to the cheapest vendor, $45 for a termite inspection, and I even pay that for them. But those are 3 of the inspections that you need. The other upfront cost would be your appraisal. Now, some lenders wrap that appraisal cost into your final closing cost, so you can just pay it at the closing table. But some lenders require upfront. So just to alleviate any issues, I say just have it in your bank account just in case. And that appraisal can be $300. It can be $600. So you want to have at least $2,000 to $3,500 in the bank when you're starting the process.
And that's just in reserve for your costs that will incur over the process of from pre-approval to closing.
Exactly. Okay. And then once you get to closing, you have closing costs. Now, closing costs is kind of like iffy, because sometimes sellers can pay closing costs, or they can pay a portion of your closing costs. Closing costs, those are like your attorney's fees, your lending fees, any homeowner's insurance that you would owe for the remainder of the year, any taxes that would be owed for the remainder of the year. And those costs can equate to 2 to 5% of the purchase price. Sometimes you can bring $2,000 to the closing table. Sometimes your closing costs can be up to $11,000, even higher. It just depends. I always try to negotiate to where the seller pays my client's closing costs to keep some money in my client's pockets. Now, I will say, post-COVID, These, like today's market is crazy, as in you cannot go to a seller and say, okay, I know you listed your house for 175,000. I'm gonna offer 165,000 and ask you to pay 5,000 in closing. Not happening. Now, as a realtor, I can do it because right, I'll have to. If you want me to offer that, I can. I'm going to advise you not to do it, but because I owe you that duty, I'm going to offer what you told me to offer. But I can tell you, it ain't going nowhere. It's not going to go anywhere.
Or you risk the seller even wanting to do with you. Period.
Exactly.
Moving forward.
Exactly. Like nowadays, post COVID, houses are being sold 10,000 over asking price. I've seen it. I've done it. They're being sold 10, 15,000 over asking price with people not even asking for closing costs. So you got to have a realtor that knows how to negotiate, to say, hey, I'm going to offer this, but I'm going to get some money from my clients, even if it's only 2,500 towards closing. Then I can, finagle everything else on the back end. But my job is to fight for my client, and whatever offer that we submit, I'm going to make sure it's the best offer. Now, if we lose, knock on wood, because I don't like to lose, in multiple offers. But you best believe that I'm going to help you to get the best bang for your buck and to help you save some money in the long run. But all in all, you can't purchase a house with no money.
That's right.
That's the biggest thing. You got to have at least some reserve.
And it may start with your credit score, but it doesn't just end with your credit score. Some of my clients, and that's why I wanted to do this series, because the reason why a lot of people come to me is because their goal, when we talk in consultation, their goal is, I want to purchase a house. Very seldom, you do have some who are interested in simply improving their scores just to improve their scores. They don't want to purchase a house. They may already have a home or whatever the case may be. But everybody who comes through my system, or everybody that I work with, their end goal is to purchase a home. So I tell them, it doesn't just start and end with your credit score. You have to have other things in your profile and in your personal arsenal, meaning your bank account, your income. Your job has to be stable. You have to have your taxes in order for the previous years and the current and upcoming year. All of these things factor into the process, and I'm so glad that you are covering all of this. I know that it is a lot of information, everyone, but we want to put the information out there. This video will be available for replay in the group, and you will be able to watch it at your leisure, and write your notes more carefully and get your thoughts together. But the main thing is that you arm yourself with the knowledge again, and I've been saying that all night. That's my favorite statement now, 2021, I guess. But knowledge is everything. Don't walk into situations blind. Don't just choose a realtor because you see that they're posting something on Facebook that they sold a home, which is good. Now, that is a good start, because if this person is selling multiple homes, I have several realtors of mine who are closing constantly. So if your closing rate is pretty decent or pretty good, every other day I'm seeing you posting a closing, then that lets me know that you could potentially know what you're doing. That's not the be all, because your realtor is the expert in your corner who's going to be championing these deals for you. They're going to be looking for things you may not even know to look for, like closing costs, upfront costs, earnest money, all of those little things that, child, I know about them, but I'm not a realtor expert. So, when I hire someone, I want them to be on point,
Right.
So we do have a couple of questions that I see in the comment section. So another member asked, How about repos on your credit? I think that repossessions, you can get a home with a repossession, right?
Yeah, you can. And again, like as far as repossessions, charge-offs, collections, all of those, they kind of depend on the age of that
Mm-hmm.
transaction. It just depends, and like I said, it can vary from lender to lender, because some lenders may say
Yeah.
we're not accepting any
Yeah.
repossessions. Some may say don't
Mm-hmm.
worry about it. It's a year old. It doesn't even affect your score anymore. So it just
It
depends
doesn't.
on the lender
On the
that
list.
you use. Yeah. Hmm.
So to answer that question, Shakila, it's all about your lender, and it also depends on the age of it. And then
Yes.
you might have a lender that it won't fit. Now, I can tell you, you can't have a repossession in February and think you're gonna purchase a home in March.
Exactly. Exactly. And then
I know
late payment,
that's not.
because you can't have a late payment in February and think you're gonna purchase a home in April or May. You need late payments 9 months earlier, at least 9 months earlier. Nothing within those 9 months.
That's right.
Now, some lenders may say
So
6 months, but if you want it to be attractive to the lender, at least
that's
nine
right.
months.
And remember, your credit report that is like your resume for home buying. That is, they don't know you. They
Hmm.
don't know you to know that your credit report might not be the best, but you have the income and
Right.
you have the drive now because you're determined to get a house. Now you have the drive
Hmm.
to do what's right. They can't go by that. They can't go off of this, this urge and this money that you have right now.
Hmm. Hmm.
They have to look at your history, and the way that they determine your history of paying, they look at your credit report.
Exactly.
And that's a big thing. That credit report tells a story. And I have seen it all. I have seen it all. Okay. So, and everything can be fixed with change and by making the right moves. I'm not saying you have to come to me, but at least seek out a consultation from an expert, a credit expert that can help you clean up your credit report. Because I remember you said earlier, some people just may need to get some credit, like a secure
Mhm.
credit card and so on and so on. That might work for some people, but for others, it may be a different formula that you have to apply. Okay.
Right.
So, okay. I just saw this question that Corey put. Hey, Corey, he said, what about debt to income ratio? Now that's credit and debt to income ratio are the
Yeah.
two biggies,
Yes.
because I do know that the debt to income ratio is going to determine the amount of house that you're able to afford, or the amount that a lender is going to approve you for.
Right. And so DTI, one of the biggest things,
Yeah,
because it can
yeah.
vary from big banks to mortgage brokers, right? So a big bank will say your DTI needs to be 36% or lower. A mortgage broker
Mm-hmm.
will say, oh, I can go up, I can finagle it to about 46%, 49%, and still, get them pre-approved for a mortgage. So
Mm-hmm.
it really just depends. You don't want to have DTI of higher than 55%. It's going to be difficult to get approved for a mortgage with DTI 55%. So the more income you have, the less debt you have, it can do nothing but help you. But it just
Yeah.
depends. A lot of people, they go to the big banks like Bank of America or Wells Fargo looking for a mortgage, not realizing that they're not going to accept um all this debt, versus a mortgage broker that can actually got a little wiggle room because they're more private. They got a little wiggle room where they can say, "Oh, I can accept a little more. I can accept these medical bills. I can accept these collections." So it just depends on who you're going to talk to approve you for a loan. Which brings me to another thing. You can shop around with lenders in a 30-day period. So once you go to a lender and they pull your credit, that's a hard hit on your credit report, within 30 days,
Mhm.
you can shop around as much as you want. So if this lender isn't giving you what you need, or they say your DTI is too high, go to another lender to see what they say, because they may, give you a little more money. They may approve you for even more, even with the debt that you just went to lender A for and they disqualified you.
Yeah. So when you go to a different lender,
Mm-hmm.
will they pull it again, or will they use what, if you go with the report from the previous lender, does that suffice, or does that lender want to pull again?
They're going to pull your score again. But the thing is, you can
Okay.
shop around for mortgages within a 30-day window with it only affecting your credit report once.
One
Yeah.
once. Yeah. Gotcha.
Yeah, as long as it's within a 30-day window, you can shop around for
Yeah.
mortgages with as many different lenders as you choose.
Okay, great. Because it's a little bit different from car shopping, where you might incur 20 inquiries at once.
Mm-hmm.
Um, I'm pretty sure
Yeah.
everybody here has experienced something or another. Um, okay, great. So that's DTI. Corey, I hope we answered your question. Um, Okay, another question as it relates to DTI: would it be smart to refinance? And Corey, this might be a question more suited for a lender, but we're definitely going to try and answer it. Would it be smart to refinance your vehicle to help get your DTI down?
Um,
Refinancing doesn't necessarily um,
it comes
decrease your, does it?
No, I don't refinance it. This is a question for a lender, but
Yeah,
in my opinion, I have to say that in my opinion, refinancing doesn't necessarily help like right then. Now over time
yeah,
it can help.
fine.
But
It does.
at the moment, like if you're refinancing an auto loan just to purchase a house, it's not going to help you in the short interim, basically.
Mhm.
But before I say something that's out of my realm of
Yeah,
expertise, I would definitely say talk to a lender, so they can
agree.
give
Yeah.
you a little more insight on refinance.
You know, refinancing, and I'm just going off of my knowledge of refinancing and debt. Refinancing makes it easier for you to be able to pay off that amount over time.
Exactly, because
However, if your debt is 65,000, or I'm sorry, a car note. So if you got a $35,000 or $30,000, $25,000 car note, the debt is still 25,000. You're just changing your
it out
monthly
to
payment and you're stretching
exactly.
it out over time. So that debt is still being factored in. Now, in my opinion, when people ask me, and you can correct me if I'm wrong, Ashley, because if I've been giving people the wrong advice, then you let me know. But for clients, when I see their debt, because I can see how much debt they have when I in my system when I am working on their credit, it'll tell me
Mhm,
what their overall debt is.
mhm.
Um, One way is to pay down as much as you can.
Right.
Um, you know, I've even had clients get extra jobs because if you
Mm-hmm.
increase your income, then you have more money to decrease
Yep.
your debt.
Yep.
Um, if you right now with student loans being zero interest, now is a good time to throw money at your student loans to decrease that student loan debt. What do you think about that when it comes down to student loans? You know, right now we're in that zero interest.
Right.
Paying on it now can help them to decrease student loan debt overall.
That is true, but I would say don't throw any money at student loans right now.
Yeah.
Um,
Well, true.
yeah, because especially if you have other debt that you're trying to dwindle down, don't throw any money
Yeah,
at student.
and student loan debt comes last. If you're
Yeah,
numbering your debt, student loan is last.
definitely, definitely.
You
Snowball,
deal with
snowball.
everything else.
Start with
Yeah.
small stuff and then work your way up. Snowball method. Okay.
Yeah.
but
And
yeah,
then like credit card debt is going to give you a bigger bang. In my opinion, I think I've seen clients who are able to pay off a credit card. If you got a $20,000 credit card debt and you pay that off, that alone is going to boost your credit score. It's going to
exactly.
help your utilization and decreasing your debt.
Exactly. Any of that
So
revolving debt, that plays the biggest part as it relates to
yeah.
your credit. So, and late payments too. That's what you want to avoid, late payments. I actually had a deal. My client, we'd been working on this deal for about 4 months because she had quite a bit of debt, but the lender that I paired her with was really working with her, got her going and everything. 3 weeks from the closing table, she had a late payment hit her account
Oh no.
to close on her home. And then
Oh
the thing
no.
with late payments, I think like you have like a grace period, but I think it doesn't really hit your score until like it's over 30 days late,
Yeah.
right?
30
Yes.
days. Yeah, it has to be 30-day late. So the way that it works is it is not the credit card company doesn't get that report from, I'm sorry, the credit card company doesn't send it to the bureaus until it's past 30 days
Mm-hmm.
after the minimum due date.
Yeah. Yeah.
So yeah, and a 1 30-day late payment can drop your credit scores upwards of 65 or more points.
Wow.
1 30 day.
Wow.
A 60-day late, even more.
Yeah.
And the higher your credit score, the more points you
It's gonna
lose.
drop. Yeah. Yep.
The lower your credit score, you're gonna still lose points, but it's not gonna affect you as much as it would a person say with a 680 or a 670 or something like that. That
Right.
they could literally lose 100 points per bureau, and
Mm-hmm.
I've seen it happen. I've seen it happen.
Yeah. Late payments are.
And listen, you talk about a blow to the heart when you see those a late payment. It's like, okay, so it and I can answer this question in the chat. It says, if you pay off a major credit card, should you wait for pre-approval? Yes. If you
Mm-hmm.
pay off a major credit card, you want to wait until that
Until
is reflected on your credit
exactly.
report, and that usually takes about 30 to 45 days.
Right.
Right now with COVID, you want to give it a little bit of time, but normally it's 30 days
Yes.
for it to report. Get myfico.com. I tell
Mm-hmm.
people all the time, get myfico.com and in order to monitor changes to your credit report. So
Right. And another thing
before
too,
moving forward.
like with auto loans, don't think that you have to pay your car all the way off, because
Yeah,
once you actually pay that car off and that loan comes off your credit report, it's going to drop initially. Your score is going to drop
that's right.
initially. As long
That's
as you're
right.
within 9 months of payments remaining, you can apply for a loan, because that debt is not factored into you being able to obtain a mortgage, as long as you only have 9 months payments or less remaining. So that's a bit of information.
And I've talked about the different types of loans, installment loans and revolving. Let me tell you, revolving is the golden child of a credit report.
It is.
Revolving is where it's at. Now, don't get me wrong, installment loans are good too. And just very quickly, installment loans are loans that will end after a certain period of time. So if you
Right.
have a car note, that's going to be about 5-6 years of payments. If you have a mortgage, that's going to be 25, 30 years, whatever you sign up for. When that time comes, remember, installment loans are a little bit different because you get your bang for your buck over time. So over
Mm-hmm.
that course of 5 years, whatever your auto loan, parameters are, you want to make sure you're paying on time every month, and that, when you're getting ready for that loan to close, when you're getting close to paying off your car, just know your credit might take a little hit because
Mm-hmm.
that loan is coming to an end. You're
Right.
no longer paying monthly payments on it. Whereas revolving is constantly, it never changes. It never ends. I'm sorry. It can change now. Yes, it can change depending on your credit limit and all that kind of stuff. But revolving, you can pretty much finagle your credit scores by dealing with your revolving account.
Yep.
Because I know I got a credit card right now that's over 50%, and I know that all I have to do is pay it now, which I did, and I already got the points back that I lost last month because I didn't pay it on time, basically.
Yeah.
It wasn't a late payment. It was that I pay my credit cards down, and my clients know this also. I pay them down on the statement closing date, not the minimum due date, the statement closing date.
Exactly.
The date that credit card is supposed to report to the credit bureaus.
Mm-hmm.
That's a whole nother video. We'll cover that another time. Okay.
There was
okay.
one.
I did. Go ahead.
There was one question that we had. Can you apply for credit while home buying? I wanted to answer that.
Oh yeah, that's what I was just about to go back up to. No. When you are in all caps, and I'm gonna put it down. I'm gonna have it scrolling across the screen.
Yes.
No. Matter of fact, when you are getting ready to go through, when you make up in your mind, I say 3 months prior to you start searching before pre-approval, you need to put everything on lockdown.
Exactly.
Everything on lockdown.
Exactly.
You don't want nothing coming up. You don't want any late payments incurring. You don't want anything to pop up and say boo. So you definitely don't want to go in a store or go online and apply for a credit card, because what that is going to do is mess with your profile and your credit mix, and it might make you lose points. Even though it might help you, it could go either way. But don't take that chance, because you know the FICO algorithm makes me want to pull my hair out all the time. It's no guarantee what that algorithm is going to, spit out for a person. We try to guess and try to have an idea of what can happen, but I tell my clients all the time, it might do this or it might do that. Exactly. Depending on what you already have going on. It just can go either way. But definitely, when you're going through pre-approval, don't do it.
Exactly. And then once you get that house under contract, and your realtor should tell you this, if they don't, fire that realtor. Once you have a house under contract, don't apply for anything. Don't make any large withdrawals, any large deposits, because when your file goes to underwriting is going to dig all in your business. And any bank account that you tried to hide, they're going to find it. Any large deposit that you tried to sneak in there, where this extra $500 came from? What was that for? Oh, you just automatically dropped $2,500. What was that for? They're going to need a letter from whomever. The other thing, when you're getting ready to purchase a house, money in your mattress, no, that money needs to be in your bank 2 months prior to you getting ready to start the process, because you need 2 cycles of a bank statement of that money reflected on a bank statement. But no credit inquiries, especially once you actually get a house under contract. Don't apply for anything, no furniture, no car, no credit card. I know you're excited about your house, but don't look for furniture until you leave, okay? And don't say, okay,
that's right.
Closing table, I'm gonna stop by rooms to go and I'm gonna go ahead and put no, because they're gonna pull your credit when you're going through the process. They're gonna pull your credit twice, at the beginning to get your pre-approval and right before you close. And if anything new pops up on there, you can be out of a house just that fast. So don't apply for anything, because they're gonna check your credit at the beginning and the end of the process.
That's right. Oh gosh, it was a question I had. I hope I didn't lose it. Hopefully it'll come back to me. But yes, when it comes down to dang it, see, that's why I had my pencil writing stuff down. Because see, I'm getting close to 40 and I'll be losing my little train of thought. It just
we're talking about credit and inquiries during the process. Was it something else?
It'll come back to me, child. I done lost it. It might not even come back to me till tonight when I'm laying in bed.
Eventually, my answer if I keep it too.
Yeah, but just to reiterate on that, please don't make any purchases. Don't do anything. And I'm gonna tell you something else. And another thing, I am that as your credit repair person, I be all in your business now. So, because I see your spending habits, I see what you're doing financially. I ain't trying, it goes to a certain extent. Anything that shows up in your credit report, if it's something new, whatever the case may be, I can see it. And I'm going to ask questions, especially to make sure that you haven't been a victim of identity theft or anything of that nature. But make sure that before you get ready to go through this process, that you have all of your ducks in a row. Like, make sure your taxes are together. I have a lot of people that don't file taxes. We have a lot of people that don't have a bank account.
Yep.
You have a lot of people who have a chime card, don't have no bank, that sort of thing.
Yeah.
You cannot purchase a home without these things. I know that you may not like it, but if you're trying to purchase a home, you're going to have to jump a few hoops that you may not be in agreement with.
Exactly. And that's why I ask a lot of those questions up front during the buyer consultation. Because if you're not ready, I want to prepare you. You know what I mean? Get you ready. And I'm not going to just send you to a lender just to get you pre-approved. Some realtors will say, okay, let's get you pre-approved. Like without even talking to you, they'll just say, okay, let's go see what this lender's going to give you. No, I'm going to vet you first because I want to know like your history, or what you think your credit score is. Even if you use Credit Karma, no lenders don't use Credit Karma. However, Credit Karma is going to give you your list of accounts, your list of your balances on your account. Now, I'm not a credit repair specialist like Makita, but I can say your balance too high on this, your balance too high on that. And before I even send you to a lender, I'm going to say, let's work on this first. And then in 30, 45 days, once we see these balances are down, then we're going to go talk to a lender, because there's no need to incur a hard inquiry when I can see that, these are going to help you from getting the best bang for your buck. I'm not just going to send you to a lender.
That's right. And you know what your lenders are looking for. That goes right back to having an expert on your side, having someone who knows what is needed and what is essential, and preparing you and helping you to avoid steps that you might not even have to take, especially if it's something that involves you pulling your credit. You wanna pull your credit only when you have everything lined up. Okay. Right. I knew what I was gonna say. Okay, so but going back to your realtor, any realtor, in my opinion, who is okay with saying, oh, you got a 580, we can get you in a house at a 580. I feel like, and maybe because it's the credit person in me, I feel like when you're trying to get a person in a house with a 500, 580 credit score, you don't care about them.
Exactly.
You do not.
Exactly. Especially. Go ahead.
Go ahead.
Especially not today, because although you can get a house with a 580 score, you don't want to get a 4 or a 5% interest rate. Right now, you have an opportunity to get a 2.5% interest rate. And if you need to get your score up an extra 60 points up to a 640 to get that 2.5% interest rate, wait. Just wait. Like, I'm not going to. If I see the potential there, or now if my client just says, hey, I got a 580, this lender already pre-approved me for this, and this is who I want to work with, okay, fine. Like, there's nothing I can do about that. Let's go find you a house. But if you're coming to me and during our buyer consultation and I can see where there's room for improvement, then that's what we're going to work on first. I'm not just shooting you over to a lender because your score is 582 and I know you can get pre-approved. Now, you probably can get pre-approved for $140,000, or you can wait a couple months, get it up to 640, get you $200,000.
That's right.
Yeah.
And honestly, for a realtor, and I think you really covered this, it works for both of you because you get a higher commission if the person get a higher credit score. You know, thinking of it in that way for all my realtors that are on the live. Sorry, but I also have, and it. Listen, when I'm looking at credit reports, I feel like my client's credit report is my credit. You know, especially my clients who are actively doing and taking the steps to improve their overall credit. Now I have some credit. Oh, hold on one second, y'all. One second.
What do you want me to talk about? I don't. Where do we live? Where do we leave off? What were we just talking about? Credit. I can't even remember what she was just talking about. Hold on. She gonna be back by the time I figure it out.
Okay, I'm back. Sorry. Somebody picking up something. Sorry. So I had a client who was working hard on there. So it was a husband and wife team actually. And the wife was working hard on everything. I mean, they was knocking on 700. And you know, of course she had the scores to, you know, qualify for a home, but they wanted their score to, you know, they had a little bit of time. I think they had like 3 months before they had to renew their lease in the apartment or whatever. So they had about a month or so to kind of play around with. And honey, the realtor that they had ran their credit without their permission and caused their score to drop. Caused the score to drop.
Wow.
So that's why I say it's very important that the realtor that you have has your best interest at heart and that they are working to in your favor and they actually care about you. You got to ask them questions. Like a realtor, in my opinion, just like a credit repair, you question them from top to bottom and talk about things that you don't want to happen just as well as things that you would like to have. Like discuss your worst fears working with a creditor and what you're looking for. I'm working with a realtor and what you're actually looking for. Because I'm gonna tell you, you have some realtors out here that are all about just a closing and a commission. And even though that's the goal that we're trying to get to, your clients are people. They're going to be in this. I would hate if I was a realtor for me to help a client get in a home and then they foreclose.
Exactly. You don't want to be house poor. Like I'm not just going to put my client in a home just because they qualify today. No, longevity. Exactly. Like I want you to be able to stay in this home. So I'm going to prepare you. And that's why we're not going to a lender if you only have $100 in your bank account. Because if you can't save money now to even start the process, yeah, you can afford your rent right now, but you want to have some reserves. You want to have reserves. Yeah. And I'm not going to, I want my clients to actually get in a home and keep that home and not foreclose in 2 years because they couldn't afford it.
That's right. That's right. So I think we pretty much, my notes are written, but I think that we answered all of our initial home buying questions. And honestly, this session, we can pretty much do a session like this every week. Okay. Yeah. And it can focus on one aspect of it, because the area that I want to go back to is in more detail, maybe it'll be during a separate session. It's talking about the cost, the different costs, like what factors into your closing, the different questions that you need to ask for your closing. So I'm preparing my list for my next live.
Okay.
And bringing on a lender and a realtor, having a lender and a realtor present, because I'm gonna tell you, the lender is where it's at. They are going to be the one. I did a session with a lender when I first started Elite Credit, and he opened my eyes to a lot of things.
Yeah.
And they are the goats behind. They are the ones that really work the magic.
I actually this coming Tuesday, I'm actually going to sit with a lender because although I'm a realtor and I know what I'm doing, there's so many other things to learn. And I want to get a little deeper into the lending side of real estate so that I can, like, I'll know how to what's the word? I guess qualify my clients with a particular lender and not just looking at their score and say, oh, I can send them here or I can send them there. No, I want to dig deep. Like, exactly what are these lenders looking at on the credit report? Why is this collection counted but this collection isn't? So I do have a like a little training session this coming Tuesday that I'm pretty excited about. So
well, honey, get that knowledge, honey, because the more you increase your knowledge, add on to your expert level, and that will translate into coins over time.
Or I can be an asset to other people too. So I'm excited about it.
So actually, let me get your information because I want to put it down here on the bottom as we get ready to close out in a second. We're going to I'm going to actually I'm going to put everybody who, let me see how I'm going to do this. I need everybody who is interested in being a part of the drawing. I'm going to provide you with a little Cash App, okay? A little Cash App. If you commented, just go ahead and drop a comment in the chat, and that will put you in the drawing, okay? Just for attending. Just drop it. Some people have already done that several times, so that's good. But just drop a comment in the chat saying that you were here. You can even tell me about your experience if you learned anything. Just drop it, and that will qualify you for the Cash App drawing simply for attending tonight. Ashley, how can people reach out to you? I have your name. What is your contact information?
Phone number 864-640-7004. You can DM me on Facebook, Instagram, Ashley Sells SC. That's my Instagram and my Twitter.
Sells SC. Ashley Sells.
Mm-hmm.
So it's Ashley SELLSSC.
Yes.
Okay, and that's your Instagram.
Right. And if you go to my Instagram or if you look on my Facebook, you will actually see my link on there. If you want to book a consultation, I would love to chat with you.
Awesome. I know that's right. Definitely. It's all about networking and putting our people out here together. I know we packed a lot in like an hour and some change. As you all can see, this is only the beginning, and we are going to be doing more of these. We will have I think the next one is, we have to get scheduling together, but just to let you all know, I will be forming a home buying private group only for home buyers. And I'm trying to determine how I'm going to run that group. But in the meantime, we're going to be doing the sessions here from my credit group, okay? And more details about the home buying group will be provided a little bit later, and I'll put all that information in the credit group. Coming up, we're going to have sessions with the lender coming up, as well as an inspection expert. Okay, so when you have found that home, we're going to help you ensure that that home is not a money pit of troubles for you. We're going to make sure that you don't have to out a whole bunch of money to repair the home before you even get in the home. So inspections are key. And so we're going to be
you got new construction, you don't need an inspection either, just FYI.
That's right. That's right, because builders can be slack and they can try to cut costs, and you want to make sure that if you're investing all of this money, that it is being spent wisely. So spend the extra couple $100 to get a true inspection so that you don't end up spending out thousands of dollars later, or
Right.
worse, foreclosing or wanting to get out of your mortgage because you're no longer happy with your house. So
Exactly.
Ashley, you are a jewel. Thank you so much for lending your talents to us tonight. You guys, please find Ashley on Facebook and Instagram. Let's share some love with her by liking her page and following her. If you need to reach out to her, her number is listed on the screen, 864-640-7004. And until next time, my darling, thank you so very much.
Thank you. Thank you. I really, really enjoyed it. I am definitely looking forward to the next one.
Yes, we are going to set something up for March for sure. We're definitely going to set something up for March. And so we'll chat about that over the next couple of days. So thank you so much, Ashley. Guys, don't forget to comment. Be in the comment section that you were here. Drop an emoji, whatever you got to do to let me know that you were here. I am going to post the winner of the Cash App as soon as I get off of this live. Okay, so thank you guys. If you are interested in a free credit consultation, all you need to do is go to www.elitecreditservicesllc.com and click appointment, or I think it's appointment or schedule, one out of two, child. But it's there on the screen to schedule your free consultation, and let's talk about your needs so that we can help you get into the home of your dreams. Thank you guys so very much. Ashley, thank you so very much.
You're welcome.
And we will see you guys on the next live. Thank you guys and have a great night. Be
All
safe out here.
right,
All right,
take care.
Ashley. Bye-bye.
All right, see you.
Bye-bye. All right, guys. Thank you, guys. This was so amazing. Please, if you want to leave me some, if you are interested in a certain topic, inbox me or email me at info@Elite Credit Services LLC so that we can bring these sessions to life. And until next time, I will see you guys in the live, and you guys have a safe evening and be safe, and take care of yourselves out here in these streets. Okay. Bye bye.